Before we dive in, remember that this analysis is my personal trading perspective and does not constitute financial advice. For today's trading session on August 6th, expect a cautious, choppy, and sideways market. We are seeing this action because the markets need a natural pause after a sharp rally, and institutions are hesitating ahead of major data dropping this Friday. That makes today a day for observation and capital protection, rather than aggressive new positioning. Over the past few sessions, the markets experienced a strong, aggressive V-shaped bounce. This chart shows the S&P 500. Notice how momentum completely stalled heading into yesterday's close, resulting in a slight 0.23% drop on the final candles. Looking at the Dow Jones Industrial Average, we see the exact same 0.23% pullback pattern marking the top of the trend. On the NASDAQ chart, the index led the pullback with a steeper 0.5% drop, but maintained the identical overall structure. This synchronized pullback across all three major indices confirms systemic buyer exhaustion, not an isolated sector anomaly. The exhaustion seen on the index charts is driven by highly mixed and conflicted market internals. This heat map shows the S&P 500, revealing severe fragmentation and a complete lack of unified buying or selling pressure. We have specific isolated strength in NVIDIA pushing up, fighting directly against heavy multi-percentage point selling in names like Google and AMD. This severe mega-cap tug-of-war means capital is merely rotating between names, preventing any broader market trend from forming today. The true reason for today's holding pattern comes down to external macroeconomic forces. This calendar shows the upcoming economic data. While today's U.S. unemployment claims might cause a brief volume spike, it's not the main event. The real focus is Friday's massive slate of critical data, including non-farm payrolls, U.S. unemployment, and Canadian employment numbers. Institutional traders flatly refuse to take massive new directional bets less than 24 hours before the most important economic data of the month. So the final outlook for August 6th remains a range-bound, sideways consolidation. Traders should manage risk by trailing stops on existing long positions rather than open new ones. Patience today is required to preserve your capital for the high volatility environment expected tomorrow morning.